The Yemen's Houthis are threatening to weaponize a second global choke point. Ansarullah Political Bureau member Mohammed Al-Farah has warned that if Saudi Arabia keeps striking Yemeni infrastructure, then Sana'a will shut the el-Mandeb Strait in tandem with Iran's closure moves at Hormuz. And that combined blockade, he says, could send oil to $200 a barrel. The threat follows Saudi strikes in Sana'a airport and a Houthi missile and drone retaliation on Saudi Arabia's Abha airport, ending a fragile de-escalation. The numbers explain the panic. Brent has surged by nearly 15% since Friday, trading over $85 a barrel, its highest since June. And the surge comes after Washington resumed strikes on Iran and has reimposed a naval blockade on Iranian shipping through Hormuz. The tanker crossings through Hormuz have collapsed more than 50%, with just 57 transits recorded over a weekend that once saw 130 ships daily. Trump has since dropped his proposed 20% Hormuz transit toll after shipping industry pushback, though strikes on Iran continue. The el-Mandeb has added a second front. It carries roughly about 10 to 12% of the global maritime trade and is critical for Saudi crude that is rerouted to the Red Sea port of Yanbu. After Hormuz disruptions began, a closure will force vessels around Africa's Cape of Good Hope, adding 10 to 14 days transit time and also pushing freight costs up by nearly 200% for some cargo. Now, India, which routes nearly about 35% of its foreign trade through el-Mandeb and Suez, has combined faces direct exposure. Analysts see this as Iran's next nuclear option after Hormuz, a proxy escalation and not yet activated. And that, of course, is credible enough for prediction markets to have pushed closure odds from 8% to 18.5% within a span of a week. With strategic reserves already drawn down from the earlier crises, traders are warning that there is little buffer left to absorb a two-straight shock. For all the latest news, download the WION app and subscribe to our YouTube channel.